You are worth $1.1 billion, and your accountant is the only person alive who has ever seen the whole shape of it at once. Not your wife, not your brother, not the man who's cut your hair every 6 weeks for 11 years and still thinks you do something with warehouses. This didn't happen by accident. It happened in steps, each one boring enough that nobody watching would have guessed what it was building toward. Step 1. A single LLC and a sentence you almost ignored. You were 26, closing on your first property, a 4-unit building in a part of town nobody was writing articles about. $310,000, financed with a small local bank that still looked at the deal instead of just the credit score. The closing attorney, a tired man named Pharaoh, who'd done this 1,000 times and cared about maybe 6 of them, glanced up from the paperwork and asked if you wanted the deed in your own name or in an entity. You didn't understand the question. You said your own name, because that's what ownership was supposed to feel like. He shrugged and said if a tenant broke an ankle on that icy front step in January and decided to sue somebody, they'd be suing you personally, not a piece of paper. You went home, filed an LLC for $125, and closed in the entity's name instead. You didn't think about it again for 2 years. That's the whole beginning. Not a 5-year plan, a sentence from a bored attorney that planted something you wouldn't understand the size of for another decade and a half. Step 2. You separate the asset from the operator. By 29, you owned 4 buildings, and a lawyer named Priscilla, hired for an unrelated lease dispute, told you never to hold more than 2 or 3 properties inside the same LLC. If someone sues one building, she said, you don't want them able to reach the others through it. You split the 4 properties into 3 separate entities that afternoon. It felt like paperwork. It was actually the first wall in a structure you hadn't drawn yet. 2 years later, a tenant in one of those buildings fell down an icy staircase and sued for $280,000. The suit named the LLC that owned that single building. It never touched the other 2. It never touched your house. It never touched your name, listed nowhere except as registered agent, a title that meant nothing to the person reading the filing and everything to you. Step 3. You stop being the connective tissue. By 32, the properties had multiplied past the point where you could keep track of them as individual relationships. 9 buildings, 9 LLCs, 9 separate tax filings, 9 separate bank statements, all requiring your personal signature, your personal attention, your personal name printed somewhere on almost every document. Priscilla suggested a holding company, one entity that owned pieces of the other 9, so that instead of managing 9 relationships, you managed 1, and it quietly managed the rest. You filed it in Wyoming, not because you were hiding anything dramatic, but because Wyoming doesn't require LLCs to list beneficial owners in a public database, and the filing fee was $100 cheaper than Delaware, and nobody makes documentaries about Wyoming. A registered agent there, found through a single search and never once spoken to on the phone, cost $125 a year and received your legal mail so none of it arrived at your actual house. Step 4. You bring in people who each hold one piece of the picture. A bookkeeper named Trudy came on to manage the day-to-day cash flow across the entities. She's never once been told what the total adds up to, because she doesn't need that number to reconcile a bank statement. A part-time attorney reviews the trust documents twice a year and has never seen the operating cash flow. A business banker named Marisol at a regional bank opens new accounts for new entities without you ever walking into a branch, because by now you've given her standing authorization and she's handled your accounts for 6 years without once asking what the combined total looks like. None of these people have met each other. All of them report to you through a single monthly summary email you read standing in a hardware store parking lot or a kitchen at 11 p.m. depending on the week. This is the actual architecture, not secrecy as one dramatic act, but a dozen small, boring decisions, each one costing somewhere between $100 and $5,000, each one adding a layer that by itself looks like nothing. Step 5. You convert cash flow into a portfolio, not a pile. By 35, the 9 buildings had become 19, and the rental income alone was no longer the whole picture. You started buying pieces of things that weren't real estate at all. A stake in a friend's small manufacturing company purchased quietly through the holding company. A municipal bond ladder that threw off income without you doing anything except let it mature on schedule. A minority position in a regional laundromat chain bought from a tired owner who wanted out and financed the rest out of the business's own cash flow, the same way you'd financed your very first building.
None of it made headlines. None of it needed to. Every acquisition ran through the same holding company, filed under the same boring processes, reviewed by the same 3 people who each saw one slice of it and none of the whole. Step 6. You build the trust, the layer above the layer. By 38, Priscilla's firm drafted something you'd put off for years. Not the kind of trust people imagine when they hear the word. No reading of a will in an oak-paneled room. Just a document that owned the holding company, that owned the entities, that owned the buildings, that housed the tenants who paid rent to a property management company that hadn't needed you to answer a maintenance call personally in over 4 years. The trust had a name chosen specifically because it wouldn't Google well, wouldn't connect to your last name, wouldn't surface if somebody typed your name into a search bar at 2 in the morning trying to figure out what you were actually worth. You paid $4,000 to have it drafted correctly. You've paid a fraction of that every year since to keep its filings current, and you've never once regretted the invoice. Step 7. You let the structure absorb its first real test. A former business partner from your early rental years, a man who'd co-signed on one deal a decade earlier and felt, sincerely if wrongly, that he was owed a piece of everything that came after, filed a lawsuit and named you personally. His attorney, working on contingency and hoping to find a personal fortune to attach a judgment to, spent months tracing assets back to your name. He found your house, modest, mortgage paid off years earlier, worth maybe $500,000 in a market where that buys an unremarkable 4-bedroom. He found a used SUV registered to one of the LLCs for a legitimate business deduction Priscilla had set up years before, worth less than the tow truck that would have to move it. He found a personal account with around $8,000 in it, because you've always kept your personal accounts thin on purpose. He did not find the entities. He had no legal basis to connect you to them, because the connecting document was a trust instrument filed in a state that doesn't require beneficial ownership disclosure, managed by a holding company whose only listed contact was a registered agent who has never, in over a decade, spoken to you on the phone. The suit settled for a fraction of what he'd originally demanded, paid from the personal account, refilled through a distribution planned as ordinary business income months before the lawsuit was ever filed. You didn't celebrate. It felt less like a win and more like watching a smoke detector you'd installed years earlier for reasons you couldn't fully articulate at the time go off during an actual fire and do exactly what it was built to do. Step 8. You keep your outside life aggressively boring on purpose. There's a version of this story where you become someone else once the number gets large enough. You watched it happen to a guy from business school, a man who made real money in a software exit and spent the next 3 years making sure everyone he'd ever met found out about it. New truck with chrome that added $30,000 to the price for reasons nobody's ever explained to you, a boat he used 4 times a year and mentioned in conversation roughly 400. You saw him at an alumni event, standing near the bar, loudly pitching a real estate fund, using phrases like democratizing access to institutional-grade deals. 3 people half listening with the specific patience people use when they suspect someone's about to ask them for money. You were wearing a fleece from a sporting goods store clearance rack. You drove there in an 11-year-old SUV with the windows down, because the air conditioning had been making a sound for 2 weeks you kept meaning to get looked at. Someone asked what you did. You said, real estate mostly, nothing exciting, which was completely true and almost entirely beside the point. Nobody at that event asked you for money. Nobody's eyes did the quiet calculation people's eyes do when they think they've spotted a number worth chasing. You left early, stopped for gas, and paid with the debit card attached to the thin personal account, the one with a balance that would never tempt anyone into believing there was more where that came from. Step 9. You let compounding do what conversation can't.
By 44, the portfolio had scaled past a point that was easy to describe casually. Dozens of properties across multiple states, each one held 2 or 3 to an entity the way Priscilla had first suggested nearly 2 decades earlier. Minority stakes in 11 different operating businesses, none of them requiring your day-to-day attention because you'd learned, slowly and at some cost, to buy into people who are already good operators, rather than trying to run everything yourself. The bond ladder had grown into a bond and dividend portfolio throwing off 7 figures a year without a single phone call from you. None of it moved fast. None of it was supposed to. Every acquisition followed the same pattern the vending machines in the 4-unit building had followed decades earlier. A tired owner, a gap between what something was worth and what its owner was willing to let it go for, and a question almost nobody else had thought to ask. Step 10. You protect the family without arming them with the number. Your sister called one night, carefully, in the voice people use when they've rehearsed something, and told you she was several $1,000s behind between medical bills and a rent increase she hadn't seen coming. You could have sent the money before the call ended. It wouldn't have registered on your balance sheet as a decision at all. You didn't. You asked her to send you every bill instead, and spent the following Saturday at her kitchen table finding a billing error the hospital corrected with 2 phone calls and a payment plan option nobody had told her existed. You covered the real remaining gap from a personal account, framed to her as a loan you had no intention of collecting on, though you never said that part out loud. You did not tell her about the trust, the dozens of entities, the registered agent who's never once heard your voice. Some of that is protection. If she doesn't know, she can't accidentally say something at a family dinner that reaches the wrong ears. Some of it, if you're honest, is something closer to grief, the specific loneliness of sitting across a kitchen table from someone you love, watching them do math with numbers that are, to you, no longer really numbers at all. Step 11. You pay for the maze because you've priced what it replaces. Priscilla's retainer runs $22,000 a year now. Registered agents across 4 states add another $1,000. The small team, Trudy, the part-time attorney, Marisol at the bank, comes to roughly $70,000 annually once every invoice is added up, which sounds substantial until you remember what months of a well-funded plaintiff's attorney nearly cost you once and what it would have cost if he'd actually found something. You've stopped thinking of that number as an expense. It's an insurance premium against a version of your life you have no interest in living. The one where people know, and knowing changes how they treat you, what they ask you for, and how carefully you have to watch every room you walk into for the rest of your life. Step 12. The number arrives without ceremony, the way it always does. The email comes from your accountant on an ordinary Tuesday. Subject line, Q4 Consolidated Summary, Final, while you're standing in a hardware store holding a compression fitting because one of the properties has a slow leak under a kitchen sink, and the property manager sent a photo an hour earlier asking which part to grab. You almost don't open it. You've received a version of this same summary for years, and they all look roughly the same. A spreadsheet, a short paragraph, no exclamation points because your accountant has never once used one. The number at the top says $1.1 billion. You read it twice, the way you read something when part of you assumes you've misread a decimal point. A man near you in the aisle is comparing 2 cans of PVC primer, entirely unaware that 18 inches away stands someone whose combined holdings could purchase the store, the shopping center around it, and dozens more like it. Nobody in the building knows. The cashier who rings up your $6 fitting doesn't know. He asks if you found everything okay. You tell him you did. You don't use a rewards card because you can never remember the number it's tied to. You drive home with the windows down because the air conditioning is still making that sound you keep meaning to get looked at. You thought once that a number like this would feel like a rival, that there'd be a version of you waiting on the other side of it who finally got to stop being careful. Instead, sitting in your driveway with the engine off, what you feel is closer to what you felt the day Priscilla first told you that on paper you barely exist at all. A kind of relief that has nothing to do with the money and everything to do with the fact that the structure held, that nobody found you, that the maze worked exactly the way it was built to. Your sister calls that same evening to say the landlord backed off the rent increase entirely after her follow-up letter. She's relieved, laughing a little, thanking you for the Saturday at her kitchen table. She has no idea what happened in a hardware store 4 hours earlier. You tell her you're glad it worked out, and you mean it completely, and the number sitting quietly in an account she will never see doesn't come up because it was never really the point of the call. Lately, you're less and less sure it was ever the point of anything at all. The leak under the kitchen sink gets fixed the next morning. The fitting costs $6.20. Dozens of entities keep collecting rent and dividends from tenants and operating partners who will never know your name. A handful of registered agents across a handful of states keep receiving mail addressed to companies they've never had to explain to anyone. And somewhere in a spreadsheet, a number that started with a single sentence from a board attorney at a title company keeps compounding quietly, without ceremony, exactly the way it was built to, for a person who, on paper, in the ways that matter most, has arranged to barely exist at all.